A plethora of data has been released this week, but with tanks, bombs and countless casualties, are we on the brink of an economic recovery or economic warfare? Shane Brett joins me down the line to discuss. Shane, the data feed has shown the general economic outlook is starting to be clearer than earlier in the year. Adverse geopolitical developments, however, whether it be in Iraq, Gaza or Ukraine, are grabbing all the headlines. Until now, investors have been shrugging off any concerns. We do seem to be in a low volatility environment, but how long can this go on for?
So currently market sentiment has been very positive. I mean, we can see that by both the New York Stock Exchange and the S&P 500, both reaching kind of record highs recently. So we are definitely in a low volatility environment. I think probably the key question is that justified? And our view would be, as you said, there are a lot of geopolitical crises taking place globally, as well as Iraq and Gaza, Ukraine, as you mentioned. There's also a lot of tension in the South China Sea between China and Japan. There's also an ongoing presidential crisis taking place in Indonesia, one of the world's largest countries. So there's a lot of volatility from a geopolitical perspective, but certainly the market sentiment has held up remarkably well. And our view would be that, in actual fact, some valuations are getting pretty expensive, and that there's probably in the more medium term a likely correction will take place across equity markets. So we've been kind of advising our clients that they should probably lock in profits pretty soon.
The Beige Book painted a reasonably bright picture of the US economy. What do you make, however, of concerns that the Fed is falling behind the curve in the face of an improving US economy and tentative signs of emerging inflation? When will be the first hike in Fed funds come, do you think?
I think it's going to happen in the second quarter of next year, and certainly I see that they have a June 19th, 2015 meeting scheduled, which a lot of commentators believe that will be the first hike in the main interest rate. Certainly, the Fed could probably be accused of slightly falling behind the curve. It's moving very cautiously, and certainly Janet Yellen wants to ensure that the recovery is definitely taking place, and I think it is. I mean, there's an ongoing gradual recovery right across the U.S. economy. You know, there has been mixed data with the bad winter, and housing has kind of started and stopped in places. But certainly, I don't think inflation is going to be a huge worry in the near future.
Inflation data in the UK this week was also interesting, as it showed prices reaching back up to 1.9%, touching distance again of the Bank of England's 2.0% target. Markets reacted by pushing the pound back up above 1.71. With this and your previous comments in mind, what is your outlook for the pound dollar?
So the pound is going to continue to strengthen, probably a little bit more mildly against the US dollar over the remainder of the year. I mean, it's had a very positive year, going from probably 150 to 170, and obviously it's increased in value substantially against the euro as well. The key point is that this is underpinned by a really solid economic performance in the UK. The British economy is the fastest growing in the G7 nations. And the Bank of England had to obviously move recently to try and dampen the property market, especially in London and the southeast. So I think an early interest rate rise is on the cards, is more likely. Certainly Mark Carney, the governor there, has made it clear that he's prepared to move, as the employment figures specifically recover, as well as the inflation rate continues to rise. But certainly, I mean, the results of the Scottish referendum could easily throw a spanner in the works in September, depending on what the outcome is there.
Data from China seems to have allayed concerns over a potential hard landing risks to its economy. Are investors being too quick to forget a potential bursting of the property bubble and collapse of the shadow banking system?
So I think there are certainly two elements to this. On the property bubble side, the market has slowed down in terms of sales in the first half of this year, but certainly, I mean, the property market is certainly still overpriced. But I think in one sense, the Chinese economy has held up reasonably well, and you can see that the increase in demand from commodities has also been reflected in the recent increase in both the copper price and the zinc price as well. So I do think as the US economy improves, China will kind of follow that gradually as well. The key risk is the second part of your question around the shadow banking system, which really, in the medium term, we believe there will certainly be a blow up there, potentially a Chinese Lehman moment. Even only this week, you might remember back in January, there was a potential near default by one of these shadow banking trusts. And currently at the moment, the same institutions having problems pulling together its payments right at this very moment. So we could have we could have some news on that in the next week or two, depending on whether the Chinese government will come in.
Next week, the data feed slows down somewhat, but which events or reports should our viewers keep an eye out for?
Yeah, so as you mentioned, next week from an economic perspective is very quiet, and then we'll be going into August when most of Europe here will close down. But I think most of the events that your viewers should keep an eye on are in the geopolitical area. So in other words, what's happening specifically in the Middle East, the latest developments between the Ukraine and Russia, the actual impact of what that means for some of the key prices like commodities like oil or gold. They have been relatively benign to date, but certainly people should keep an eye on them over the short and medium term.
Shane, thank you. Well, as details continue to be revealed of the ill-fated MH17, the TV team's thoughts are with the families and loved ones of those involved. Goodbye for now.